All right, here's a tax tip for the day. One of the questions I recently got from a client was if they could withdraw from their Roth IRA and if it would be taxable. And so I thought, hey, why not do a video? Because that was way more fun than just answering the question. So here's your quick answer for if your Roth IRA distribution is going to be taxable or not. Right from the IRS, we see here what are the differences between a traditional IRA and a Roth IRA. How are distributions taxed from a Roth IRA? Distributions from a Roth IRA aren't taxed as long as you meet certain criteria. So see, are distributions taxable all the way down in Chapter 2. So right here, you don't include in your gross income qualified distributions or distributions that are a return of your regular contributions from your Roth IRA. You also don't include distributions from your Roth IRA that you roll over tax-free into another Roth IRA. You may have to include part of other distributions in your income, so you'll have to check out the ordering rules as well. The basis of property distributed from a Roth IRA is fair market value on the date of the distribution, whether or not the distribution is a qualified distribution. And if you withdraw those contributions, including any net earnings, by the due date of your return for the year in which you made the contributions are treated as if you never made them. If you have an extension of time to file your return, you can withdraw those contributions and earnings by the extended due date. The withdrawal of the contributions is tax-free, but you must include the earnings on the contributions in income for the year in which you made those contributions. So one of the big questions that we see are, what are qualified distributions? The IRS defines a qualified distribution that is any payment or distribution that meets the following requirements. If it is made after the 5-year period beginning with the first taxable year for which a contribution was made to a Roth IRA set up for your benefit. And then we get to the more traditional versions of a qualified distribution, which are distributions made on or after the date that you reach 59 and a half. If they're made because you are disabled, made to a beneficiary or to your estate after your death, or one that meets the requirements listed under first home under exceptions in Chapter 1, where you can withdraw up to $10,000, which is a lifetime limit, to purchase a first home. So that's kind of the basics of it. If we look for the ordering rules of the Roth IRA distribution, part of you have to look at whether part of it will be taxable. The ordering distribution rules are as follows: regular contributions, then conversion and rollover contributions on a FIFO, first in, first out basis. You look at the taxable portion, then the non-taxable portion, and then the earnings on those contributions. So it's just a quick little primer. We can get into that if it works out for you specifically, or the best way to do it. But just wanted to kind of give you a heads up on whether those Roth IRA distributions would be taxable for you. Thanks. Have a great day. Make sure to like and share this on Facebook, or subscribe and leave a comment on YouTube if this helped you out. Thanks again. Talk to you soon.